investment is without risk, but some come with a lot less risk, like bonds. A bond is a loan that you give to a company or government. You're essentially lending your money to that organization, and they promise to pay you back with interest over a set period of time. They deserve a place in your portfolio for a few reasons. 1, they're low risk. No matter what happens, the organization you lend to has to pay you back with interest, even if the economy takes a downturn. 2, steady income. You know exactly how much and when you'll get paid. Perfect for when you need a reliable source of cash flow, like in retirement. 3, diversification. If you're heavily invested in stocks or other high-risk investments, bonds can help balance out your risk and reduce your exposure. There are 3 main types of bonds. First up, corporate bonds. This is when, instead of a company getting a bank loan, it issues bonds, usually when bond markets offer better terms and lower interest rates. Municipal bonds are issued by state and local governments and other related entities, usually to pay for day-to-day obligations and big projects like building schools, highways, bridges, or sewer systems. And treasury bonds are issued by the U.S. federal government. As a bonus, you get a tax break on any interest income you earn. Bonds work a little differently than other investments. Most bonds pay a fixed interest rate, a set rate that never changes. For example, if a bond has a face value of $1,000 and a 5% interest rate, it pays $50 every year. A bond's maturity date is when you can expect your initial investment to be fully paid. Bonds have different term ranges. Short term have maturities of up to 5 years, medium term, 5 to 12 years, and long term, greater than 12 years. Short-term bonds are generally considered the most safe and stable because you're repaid the fastest, but usually offer lower returns. Longer-term bonds are subject to greater pricing swings, but make up for the added risk with higher overall returns. A credit rating scores the likelihood a bond user will pay its interest and principal payments. It's like a report card. AAA, the highest rating, is like an A+ and reserved for the strongest bonds. Junk bonds are issued by financially shaky companies, more likely to default, so they earn lower marks. But if you're willing to take on the extra risk, you're rewarded with higher interest rates. So how do you invest in bonds? You can buy individual bonds directly from the organization that issued them or through a broker. It's good when you're investing a lot of money or looking for a specific type of bond. And your second option, bond funds, are mutual funds that invest in a variety of bonds. The specific bonds are constantly changing based on market conditions and investor demands, so they don't have a specified maturity date. This flexibility means more convenience and less risk, making them an ideal choice when you don't have a lot of money to invest or want a more hands-off approach. Let's put this new knowledge into practice and trade a bond in our SMG portfolio. Log in and go to Trade. Enter a trade and click Bond Trade. Then, search for bond. To trade a corporate bond, enter part or all of a company name and click Search Corporate Bonds. There are lots of options, so we need to make sure we select the bond with the right CUSIP number, a unique ID assigned to all registered bonds. In the stock market game, it's preceded by a prefix, but we'll get into that in a bit. Here's the one we want right here. If you want to learn more, just click the symbol. To trade municipal bonds, select a state from the drop-down. Let's choose Hawaii, and click Search Municipal Bonds to see all the bonds issued in that state. To search Treasury bonds, select Search Government Bonds for a list of bonds. If you know the CUSIP number of a bond, you can enter it directly on the Enter a Bond Trade screen. Just add the correct prefix. CO for corporate, MU for municipal, and TR for treasury. So we enter TR underscore, then our CUSIP number. Click back to the Enter a Trade screen and select Buy. Unlike stocks and mutual funds, bonds trade in dollar amounts. You can only buy and sell corporate and municipal bonds in $1,000 increments and treasury bonds in $100 increments. So let's do 100. Click on Preview Bond Trade, re-enter your password, and Confirm Bond Trade. You'll see a trade order confirmed message with information on where to view the transaction in the Pending Orders page. During market hours, the trade will appear in Pending Orders and execute when the market closes, then move to Transaction Notes. That's bonds in a nutshell. Let's finish with some takeaways. 1. Bonds are debts. When you buy a bond, you become a lender, and the issuer, the borrower. 2. Although bonds offer lower levels of risk, they also offer lower returns. 3. Bond terms typically span 1 to 30 years. 4. Bonds are only one part of a diversified portfolio. Bonds are an important part of a balanced portfolio, especially as you age. Wondering if you have the right mix of investments in yours? Tune in next time to learn how to evaluate your portfolio.